Welcome back, everyone. This is NYU Grad's daily podcast covering stocks and finance. Hope you're having a great weekend. I'm recording this on Sunday, October 22nd. I'll be releasing it maybe even sometime tonight, but I'll be covering the Friday session, October 20th. Man, it was worse than Friday the 13th, the week prior. Let's jump right into breadth, as you know I'd like to do first. So on Friday, we had 27 new highs and 1,006 new lows. Repeat, 27 new highs and 1,006 new lows. Horrendous complexion. We now have 82% of shares trading below the 50-day and 75% of stocks trading below the 200-day moving average. So not a pretty picture here. When you take a look at sectors, every sector was red on Friday. Technology led to the downside, 1.75%. Then you had energy down 1.5%, consumer cyclical down 1.4%. Looking at the Magnificent Seven, all were red. We've seen in the past few sessions maybe one or two were red and the other five were trying to hold on. But just going through the numbers here, Microsoft down 1.4%, Nvidia down 1.7%, Google down 1.6%, Meta down 1.3%, Amazon down 2.5%, Tesla down 3.7%. That one can't catch a break. Apple 1.47% red. Then you had major, I would say, supporting actors / actresses, right? Like you have Oracle down 6%, Adobe down 2.6%. Then you have major financials like JP Morgan down 1.6%, Bank of America down 2.4%, Wells Fargo down 2.2%, American Express down 5.3%. So I think you get the picture here. It was a horrendous day. I think on a points basis, Friday the 13th was worse, but on a complexion basis, I think October 20th was even worse session for anyone that was bullish. Looking at the sectors, you had technology leading to the downside. That's never a good thing. And just going back into my notes for Friday's session, in the morning, I had posted, I'm just going to read you my quote. It was an alert on Substack Notes. Please follow me there so you don't miss any of these alerts. I had written, quote, I would be surprised if there isn't some rally attempt because, we have been so oversold. After all, it is VIX Crush Friday. 43.35 ES is where I think it would run out of gas to the upside if there is a morning attempt for a rally. But if we break 42.40 below, wowzer. And then mid-morning, I had posted, hey, the NASDAQ is not showing any type of support for a rally. And then I did a comparison of equal weight S&P and equal weight NASDAQ versus just a standard overweight of Apple and the Magnificent Seven. And it looks really ugly. Like they've all, are below the 50, and it just looks really ugly. Some are already like violating the 200-day moving average or, closing in on it. So it just looked really ugly. And then at 10 a.m., I put out an alert. There were 15 new highs and 484 new lows already at 10 a.m. So sure enough, right after that 10 a.m. alert, we started to sell off really hard. And breadth never saved the markets that day. In the afternoon at 1:25, I posted a chart showing that we rallied back up to like 42.85, which was the lower boundary of the previous range overnight. And then it just had no more gas, and we sold off hard into the close. And then toward the end of the day, I was looking at three charts: the volume of breadth, advanced decline, the ES S&P futures, and the equal weight S&P futures. And just looking at those three, I just knew it was going to continue to sell off. And as I mentioned, we closed with 27 new highs and 1,006 new lows. It's just ugly picture. Let me walk through some charts here to give you some analysis, and then we'll break with what to watch this coming week. When you take a look at Apple, it's below the 50-day moving average. It's about to break this horizontal line of 171, easily going to go to the 200-day moving average. If we break the 200-day moving average, Apple's going to go to 145, 150, and that's a huge drop in market cap. Amazon is also looking pretty bad. It is about to break this 124 level. Easily can get to the 200-day moving average to test there. The 200-day moving average is basically 10 points away. So we closed at 124.95. The 200 days at 116.37. Google is still bullish in that it's above its 50-day moving average. It's holding on. We'll have to see how Alphabet Google reacts in the days ahead. Meta, also one of the last ones standing on the Magnificent Seven. They are still above the 50-day moving average. So again, it's helping hold up some of the market. And Microsoft is also above its 50-day, doing its job, trying to hold up the world above its 50-day moving average. NVIDIA looks horrible. If it breaks this horizontal area of 409, we're going to zoom down to 343 to test the 200-day and continue selling off there. Tesla, already below the 200-day moving average. We can easily get to 180. I believe if the sell-off continues on Tesla, which is a huge drop. And if 180 doesn't hold, man, we can also go down to 160. And keep in mind, we're at 300 this summer. The last chart group I want to go through is financials. JP Morgan, they had massive earnings released the other day. We are selling off now. We're under the 50-day moving average. We're approaching the 200. If the 200-day moving average, which is at 139.99, does not hold, we can also take the elevator down here to like 133 to 135 on JP Morgan. So that's not good. Bank of America looks horrible. Wells Fargo looks pretty sick right now, lost all of its earnings pop. KRE, which is the regionals, that already broke its horizontal. I think KRE is going down to 34 to 35 bucks. So that's kind of a high level overview of how I'm looking at the markets right now. For the following week, there are tons of earnings teed up. Just to give you kind of a sampling of this, you have Tuesday before market hours, Verizon, Coca-Cola, General Motors. After hours Tuesday, you have Alphabet, Visa, Texas Instruments, Snap, which is Snapchat. Wednesday, pre-market, you have T-Mobile, Moody's, not that important. After hours, you have ServiceNow, Meta, which is Facebook, United Rentals, important earnings there, UPS on Thursday, MasterCard, Intel, Ford, and then Friday you have a lot of energy and oil companies like Chevron, Exxon reporting, and then you have CPG companies like Colgate. It's a big earnings week for sure, so that's something to watch. When you take a look at the economic calendar this coming week, you have on Mondays pretty light, but on Tuesday you have the Case-Shiller Home Price Index. Wednesday you have new home sales. Thursday you have GDP, and Friday is PCE numbers. So with that, I want to thank everyone for subscribing on Substack, following on Substack Notes so you don't miss anything. I really appreciate you guys continuing to follow me on the podcast. So I will see you after the Monday session. Later.